Hello, welcome to Impact on CNBC Africa, curated by Fintech TV. I'm your co-host, Kavitha Gupta.
And I'm Vince Molinari, and so glad to be back with my partner here at the New York Stock Exchange. Tell us what's going on, Kavitha.
Oh, as usual, always excited, but this one is close to heart because we are talking to a co-founder of Branch and Kiva, the guy who pretty much created how the micro-lending for the Western world is looked at.
Well, Matt Flannery, just amazing, and what he was so much a visionary, but there's one thing to be a visionary, but also to implement and execute. And going back to the early days of creating Kiva and going from there, just amazing.
Kiva has already done multi-billion-dollar loans, but that wasn't enough for Matt, so he went and created Branch, which is going to be a digital bank, like a neo bank for the whole Africa and India, and he's going places with that. I'm very excited.
Making money and doing good at the same time. What a great theme.
Absolutely. Do check this interview out.
Hi, and welcome to the Impact at Fintech TV. I'm here today with my good friend Matt Flannery, who's also the CEO of Branch, one of the world's largest microfinance companies with operations in Africa, all across Africa, and now in India. Matt's been doing this a long while. With Kiva, a nonprofit that he co-founded, he was one of the pioneers in microfinance in Africa, and now he's a serial entrepreneur on his second startup. Matt, welcome to the Impact. So wonderful to have you.
Thanks for having me, Akshay. How are you?
I'm doing well and excited to talk about microfinance for the poor all across the world and your journey, which has been, I think, amongst the most incredible and fascinating, from an external point of view. So Matt, this maybe the first place to start is really how you got started with this, and I think that story is quite incredible with Kiva. So why don't we start there? How did you figure out that this was something you even wanted to do, and how did you figure out that it was working?
Good question. It has to go way back here. So I graduated from Stanford in 2001. I'd studied philosophy of all things and also computer science. And I didn't really know what I wanted to do with my life. So after a few short jobs and doing random things, I found myself volunteering for a church-based microfinance institution in Uganda. So in rural Uganda, actually, in 2003. And as somebody that knew how to use the internet because I studied computer science, I had the idea to raise money essentially for the folks that I was working with out there. For like a pharmacy was one of the first ideas. Like this man had a pharmacy and he needed to buy more medicine, like $500 worth. So I was like, why don't we raise that from my family and friends over the internet, and we can make it a loan, because this guy was already paying back. He was going to pay a loan, so why not just get access to more money, lower price, raise it on the internet, try to do it cross border, see if we can make it work. It was a big experiment. It's sort of like my side project for actually 2 years. I ran the side project and then a lot of other people joined and helped out. But the first people we helped was like a woman that sold fish on the side of the street. She needed to buy a freezer for $300 so she could put the fish in the freezer. Simple concepts like that out on the border of Kenya and Uganda. After doing it for a couple of years, and I had moved back to San Francisco, and it started to get a lot of publicity, and different bloggers were writing about it. This is before Twitter, and this is 2004, and people were blogging about it. People were donating. People were lending on the site. And we were starting to raise millions of dollars. So that's when I knew I had to take it more seriously. And I got a lot of support from Silicon Valley startups like PayPal and eBay at the time, and Google, and different friends at different companies helped to make the site scale. And we ended up starting a nonprofit and getting a lot of staff and expanding. And we ended up working over a 10-year period in 80 countries. So during that time, sort of my first post-college real job, I was able to travel the world, work in all over Asia, all over Latin America, Africa. It was a really, really exciting time. It was when the internet was largely seen as a force for good. and a force for democratization of finance. And there was a lot of optimism around globalization at the time. So Kiva was part of that. And then I got excited, so the people we're helping were basically being helped through nonprofits and charities. And I noticed that banks weren't really serving the average person back in Uganda, back where I started. So I got the idea to really start a bank. So 5 years ago, we started Branch, which the idea is it's a branchless bank. So I named it Branch because it's like a bank branch in your pocket is the idea. So we're 5 years into that story. It's a for-profit, but we're serving millions of people on their smartphones with small loans, and we're letting them invest and save money as well.
And with Branch, I think it's gone one step beyond what you could do with Kiva, right? Because now, in many ways, it's not dependent on donor dollars or people finding stories that they resonated with, but actually direct lending to individuals with no intermediaries in many cases, which I think is quite a big shift from the days at Kiva.
Yeah.
And what makes that so powerful? It'd be really cool to understand.
Mm-hmm. Good question. Well, a lot of the people we were working with in Africa started to get Android phones. They started to get mobile money back in 2014, 15. So I got excited, like, here's a group of people you can serve in a real commercial way. And that'll mean it's faster, better customer service, more access to capital, et cetera, like that. Yeah, a nonprofit's kind of hard to scale. It's hard to raise. You have to raise more money. You have to kind of appeal to people's emotional needs, and which is hard to scale. So with the banking model, we're able to take deposits and lend those deposits out to people and help them save money and access to short-term loan or long-term loan if they need it to scale their business. So it's much more rational and a lot less emotional. So that with that, I like it. But the part that I don't like as much is we're serving people that are more in a commercial demographic, and we're still not able to serve the poorest of the poor. Whereas at a nonprofit, you're sort of the mandate is to help truly people in extreme poverty, which you're able to do at Kiva. So there's a trade-off, but what I notice in Africa and emerging markets around the world is people that used to be completely left out of the system are getting access to information and payment systems through smartphones, and we're the bank that's going to serve them first.
And talk a little bit more about how you serve them through a smartphone, right? Because it's in many ways a completely different paradigm to banking. From sort of a pen and paper bureaucracy, which is what most banks are viewed at, and as in the developing world for sure, to sort of this completely different bank where everything's in your wallet, it's all on your cell phone. Yeah. There is no physical branch, so to say. What advantages does that give you compared to sort of more traditional banks?
Great. Well, we're unbound geographically, and one of the big problems with microfinance is it's so regional and local. So you can, if you really want to help lower income people in India, you might be able to serve a few villages in one particular part of the country, but you're sort of constrained by who you can visit and who can visit you at a branch location, brick and mortar location. So what you find with microfinance that's truly serving low income people, it's often very fragmented. There's hundreds, if not thousands. There's tens of thousands of microfinance banks around the world. But with the branchless model, you're able to work in sort of geographically more dispersed areas and serve people right at their home with instant services. Whereas before, people would often have to travel quite far to go to a bank or stand in a long line if a bank or a microfinance institution would serve them at all. So when you're factoring people's time, it really saves them money. People value their time. If you think about what people prioritize most with a bank, it's probably, first of all, the size of the loan that they're able to get, and second of all, the speed, and third, the cost. And we're able to serve them faster than anyone else with larger loans than anyone else will give them at a lower cost at that price point than anyone else will offer.
And what's the number of customers you've now served through Branch?
At Branch, we're 5 years in, and I think we served about 5 million people.
That's really cool. And how do you overcome questions about trust, right? So one of the things which would be quite strange for people, especially when they're making deposits, is now to have no physical branch, so to say. So how do you build trust, especially with regards to deposits?
Mm-hmm. Well, what we do is our model is to serve lower income people who are usually attracted by getting a quick loan. And that's sort of like the candy or that gets them excited, that draws lots of customers to our service. And then we offer them other products, which I would say are more nutritious. So we, savings products, investments products, et cetera, to help them build a financial history with us and increase their financial health. But we get them, the loan is the hook, and we cross-sell these other services. And what we find is about 1 in 3 low-income people that take a short-term loan, which is 1 month, 2 months, 3 months, pretty expensive on an absolute basis, but very small, like could be $2, $5, $10. About 30% of them start saving little amounts. And I'm really passionate about that too.
And that's quite amazing, right? And this could eventually translate into business loans, startup loans, and all kinds of other wonderful things for them.
Much more on the impact when we come back.
Welcome to Fintech TV, home of Exponential Voices, a global media platform for digital assets and sustainable investing.
My name is Kavitha Gupta.
And I'm Vince Molinari, and we are so pleased to be back at the New York Stock Exchange.
Headquartered in New York, where we are constructing a state-of-the-art broadcast studio, along with our studio stock exchange partners at the NYSE, NASDAQ, and LSEG, among others. Plus, correspondents and contributors all over the globe. We reach 850 million households globally, with a unique blend of online viewership and traditional TV networks. Our signature shows, the Digital Asset Report, focused on the global ecosystem of blockchain, digital assets, financial tech evolution, and legislation and regulations surrounding the sector.
I guess my question to you then is, A, are you a believer that Bitcoin is the, I don't want to call it the holy grail?
The way I think of Bitcoin is a global currency. Individual countries will continue to have their stable coins.
And The Impact, a show focused on credible social entrepreneurs, impact investors, family offices, and the grassroots warriors amplifying the needs and progress of the UN Sustainable Development Goals. Plus ongoing special series. Pat Mitchell, Dangerous Women Leading Onward. Roy Wood Jr., Faces of Race. SSE TV, UN Sustainable Stock Exchange Initiative. Price of Climate. Unique content on a global media platform. This is Fintech TV.
You were incredibly successful in Africa. Why did you decide to enter India? And how was India different from Africa?
So interesting. Yeah, I had never been to India, even though my father grew up in India. I had never been to India when I started Branch, strangely enough. But I sort of got excited about just trying to work there because of a lot of exciting trends that were happening there that we know very well. So the introduction of Aadhaar, the identity system that is basically covering the entire population. So it's electronic identity, biometric identity system. So that will curb fraud and allow us to reach people all across the country even super, super low income people are on that system. So that was great. And then the spread of digital payments through the national system of UPI, just giving over 1 billion people access to electronic payments nearly instantly overnight a few years ago, and just looking at how that has taken off and sort of set the standard for the world, a little bit like M-Pesa did in Kenya, but on a much larger scale, and it's not tied to one telco. It's a national system. So those two things, and then the popularity of credit bureaus and how there was a regulated credit bureau system that you could start using as a carrot and a stick to help people be more responsible. Those are exciting, and just the sheer number of people.
Desire to do more than lending, to really be a bank to the poor, is something that's quite unique to your journey and Branch. Right? I think you've been ahead of the curve on many of those products. And has it been difficult convincing your lenders, the folks who lend into your books or invest in you, to go after these segments, right? Because I think lending to the poor is still something which you helped establish and build. But banking for the poor in somewhat high leverage, high growth funding models for startups hasn't been really done at high scale. So is that something you struggle to gain traction for?
Yes, especially with debt funding. I think with equity and venture capital, given that I'm here in Silicon Valley, I'm well connected, I have a track record, I have an advantage, for better or for worse. I'm very privileged to be able to raise venture capital money and access money that way. But in terms of the debt capital markets, like to really scale to, a portfolio of hundreds of millions of dollars, you're going to have to raise a lot of debt capital and then lend that out to low income people. And I think that is a tough sell. It has been a struggle. It's been the main struggle in India, especially in India. And so that's why the lower income segment in India is relatively underserved with credit. You might think they have a million options, but they're all small, and the credit providers at the base of the pyramid are rather small and have trouble raising money. And that has to do with some macroeconomic factors like the NBFC crisis in India, the COVID crisis in India, inflation, and other sort of larger macroeconomic factors, and the fact that they really restrict cross-border flows of capital, which really starves the country for access to credit. So that is one of the main things we have to fight in India, and all of our competitors fight. And people set up interesting structures with, subsidiary in Mauritius or subsidiary in Singapore. All these Chinese money coming across the border, and so yeah, that is the hard part about doing this in India, is accessing debt capital.
Matt, I want to talk a little bit about cryptocurrencies and how you see that changing your space. And we already talked a little bit about access to capital, high risk capital in lending. Are you seeing the nature of crypto being cross-border, less constrained, changing how businesses like yours work?
I'm really excited about working with cryptocurrency. I haven't really figured out a way to do it because in the countries where we work, it's highly regulated, and we happen to work with a set of central banks that are very skeptical, fearful of allowing crypto in their countries. So because of the central banks in Nigeria, Kenya, Tanzania, and India, the countries where I work, we decided to put it off. But outside of us, like unregulated, because we're highly regulated by all these central banks, but outside of us, my unregulated brothers and sisters, bless their hearts, they're going for it. So you see a lot of this grassroots traction of Bitcoin wallets in Africa, in Nigeria in particular, because it's a high inflation country. So I think it's inversely correlated to the level of inflation, or maybe I don't know, I confuse myself, but it's correlated to the level. So in a high inflation country, you'll find like average people are, using crypto on a daily basis, which is really exciting. So in Nigeria, I think Nigeria might be one of the leading countries in the world for crypto per capita right now. is just exploding. And why is that? It's because the Naira just moved from 300 Naira to the dollar to 500 Naira to the dollar within the span of a year or so. So that is really, really scary inflation. So the average citizen can get crypto to sort of protect themselves theoretically from inflation or hedge against it. And that behavior probably happens in India, but I understand in India, the RBI really frowns upon like NBFCs like us engaging with crypto. So we want to be the highly regulated, safe option as opposed to multitudes of unregulated apps in the space. But that's how we differentiate ourselves.
Cool. So my last question, Matt, is you've seen sort of wave one, wave two of providing finance to the poor. What's the next big thing in your mind, or do you not know? You think it's going to upend itself in the next decade, and is there going to be a new model?
I think progress in Africa is slow. I think we're building the building blocks, the basic fundamental building blocks of the financial system nearly from scratch. So whereas in the USA, if you're sort of building a new app, it has to do one thing and it's built on top of all this infrastructure. I think in Africa, the infrastructure doesn't exist really. So we're building, we call it full stack banking. Like we got a banking license in several countries and we have to like build the banking software just for ourselves to like give people accounts and all those tools, which are fairly off the shelf in, the Western world. Probably in India, it's probably much more developed also, but we have to build it from the ground up. So I think just like building an effective technology-based bank takes time because the tools aren't there. And just doing the basics like a savings account, a checking account, investments and loans, like just doing those basic things. It's not a question of what are the right ideas. These are obviously things people need, but you just got to build them from scratch. There's not a lot of like wizardry and like coming up with ideas. It's like, nope, just finance 101, like banking 101. Yeah. Like the laws also don't really catch up. So like we have to have a vault, like a cast iron vault in our office because the law requires it. And we have to have a branch with a window, even though we have no address. Yeah. So we have to do things that like an old fashioned sort of, you think of like a bank in the West, like a Wells Fargo wagon type experience. The laws are sort of catered to that. And so we have to build technology on top of that, which just takes a lot of time.
And hopefully once you've done that, there'll be all kinds of other innovations sitting on top of your platform. So that'll be interesting to watch. Yeah.
Yeah.
Cool. Matt, thanks so much for all that you do and for taking the time to speak with us. It's been a pleasure and good luck in helping those at the bottom of the pyramid have access to high quality finance.
Thanks, Akshay. Thanks for caring. Good to talk to you.